EasyEquities community. We are chatting about bundles today, and I'm joined by our Chief Risk Officer, Nicola. Nicola, hi, and thanks for hanging out with us.
Hi, Carly. It's great to be here with you today.
I know you're jet setting off on holiday tomorrow to India, so appreciate you giving us your last couple of hours of work.
Cool, sure.
Right, so today we're going to be talking about bundles. Now, bundles are managed portfolios who are put together and managed by an asset manager. In this case, it's Easy Asset Management that we're talking about. And these bundles are available in your ZAR account, your tax-free savings account, and your retirement annuity account. But we're going to be focusing on the RA today because we've got a massive initiative on at the moment where you can transfer your RA from another provider to EasyEquities and get a 1% back on the value of that RA when you do the transfer. So we're really just giving you guys some information about the kind of product universe we've got available in an RA, and bundles is a big part of that. So that's what we're talking about. Let's start off with Easy Asset Management. Nicola, can you tell me a bit about Easy Asset Management? Who are the managers of these bundles?
Sure, Carly. So I think first of all, you've mentioned that I'm the Chief Risk Officer, so that's definitely one of my roles, but I'm also the Group Executive of Investments for the group. And so also in the Easy Asset Management business, then I'm one of the executives that leads that business. So we've got a bunch of entities in our group, in Purple Group Limited, and Easy Asset Management is one of those legal entities. It's a subsidiary of our group. But it really is an asset manager, and I suppose the tip is in the name. And so the team specifically focuses on finding those top global and local shares and bonds and other types of instruments that they can put together in a portfolio to help clients achieve their long-term investment goals. So we're an asset management business, and the people that manage the money is really just a very, very talented team in the background. Our Chief Investment Officer, Sean Crom, has got 25 years of experience, 10 years trading at investment banking level, and then 15 years in the asset management industry. And he's supported by an operations manager, Sihle Ndladla, who's got just under 10 years of experience, and a junior portfolio manager who's still early stages of his career. And so also supported by a broader ExCo team members, including our CEO, Charles Savage, sits on the board of that entity, as well as Gary van Dijk, our CFO, and Neelan Morar, who I think you chatted to a little while ago, who is our VP of Trading Operations. So I'd looked at the numbers of years of experience of all of those guys put together, and between the three of them, we pretty much have like 80 years of experience. So really phenomenal team. And so it really is just a business of experts that go and scan the market for you and go and pick those top stocks to try and help you achieve your goals.
Those are some great brains we've got working on that, so I'm happy to hear. Now, each bundle has its own objective, each portfolio, but does Easy Asset Management have sort of an overall philosophy when it comes to investing? You know, how do they view things like risk?
Yeah, so Easy Asset Management is really an innovative asset manager. It would just not make sense to have any other type of asset manager in our group, Purple Group being a fintech business and group. We really are innovators. So the asset management business doesn't operate traditionally like any other asset manager does. Investment philosophy is very unique. Where Easy Asset Management really takes on a very different perspective and view on the markets and focuses on things that are called themes. And so what themes are is it's really different types of global trends, things that are shaping the global economy, things that are shaping consumer behavior, the types of things you and I are interested in. One of the themes, as an example, is attention. So what is taking our time, our hours that we've got available in the day, what is grabbing our attention? Some of the things could be things like social media. Some of the things could be going to the shopping mall. And all of those attention themes, one can link then to different types of companies that are listed in global markets on the JSE, but also in markets all over the world. And so Easy Asset Management really does very intensive research, analytics, uses advanced data analytics because we are a fintech. We work hand in hand with technology. So it's not just all of those brains I mentioned. It's also using tools and processes and data analytics, being able to get a whole bunch of millions of data points all over the world, both structured and unstructured data. And when I say structured, it's things like numbers from people's financial statements, information from their annual reports, sales, costs, all of those sorts of things about the business. But then it also uses unstructured data, like what are consumers thinking about this business? What is happening in social media trends? And it puts all of that information through technology and then comes up with those leading world themes. And then we unpack that and then choose shares within each theme. And then under those themes, we, in terms of putting the portfolio together, then decide in terms of the asset classes we're investing in. So it really is a very unique approach to asset management, where traditionally asset managers just do asset allocation first, and then they do their stock picking. We take a step back and we look at what are those global themes that are driving the future economy and markets globally. And then we do the analysis and come up with the shares and the asset classes.
Great. And yeah, I mentioned risk, and I think it's something that's important to talk about because risk is sort of par for the course if you're an investor. It just depends on where you sit on the scale. If you want something more low risk and conservative, or if you're willing to take a bit more risk because maybe you've got a longer time horizon. But I think it's also important when we talk about retirement, because so many people don't take enough risk when they are saving for their retirement. And then when they get to the end of the road, they really put in a terrible position and you can't turn back the hands of time. So I wanted to know, sort of, is there a stance that Easy Asset Management takes on risk, and within the context of retirement, what are your thoughts?
Yeah, so Carly, that's a very important point you make. If you look at the statistics in South Africa, there's only about 6% of South Africans that can retire comfortably, which means that we just don't take enough risk earlier on in our careers when we have still a long horizon to invest in, so that our money can work for us instead of us working hard for our money. So making sure you put as large as possible amount, sort of rule of thumb, 20% of your income into some type of retirement product, be it a retirement annuity or other type of retirement vehicle, so that that money and nest egg can grow for you over time. And it's just phenomenal to look at how money appreciates and is able to grow phenomenally when you leave it in the market, so that the money can really work hard for you. And so that links into Easy Asset Management philosophy and approach, is to achieve long-term outperformance. Because we know the statistics are so low in South Africa, we make sure that we put portfolios together that targets maximizing returns over the long term. So we really want to outperform the market. And Easy Asset Management has had phenomenal results. I've just looked at some of the recent statistics, and in the balanced funds, we've, in the last sort of 1 and 5 year periods, been in the top 10% of fund managers in South Africa. That's out of 272 managers in the 1 year category. So it really is phenomenal. And that is our target, is to be in that top 10%. And by doing that, we're able to help build a robust portfolio for you. But I think, just to go back to your question around risk, there really is, in how I would sort of explain it, a continuum of risks that you're willing to take. And when you're quite young, you can take higher risks and invest more in higher risk asset classes like shares, like equities, local and global. When you are potentially sort of mid-career, maybe you want to take a slightly less high-risk approach, be somewhere more in the middle. And then when you get closer to retirement, you might want to be a little bit more conservative. But nowadays, people live for so much longer. So actually having quite a well-balanced fund that gives you an exposure to a mixture of different asset classes, shares, bonds, property, etc., really sets you up for a nice sort of mixture of risk, so that you can achieve your objectives.
I was going to ask you what constitutes old, because I'm turning 40 next year and I'm certainly not considering myself old. And I'm certainly still going to be taking a bit of risk in my portfolio. I'm actually invested in that balanced fund you spoke about. But obviously, we're catering to all types of risk appetites. So can you talk a little bit? I mean, there's different types of bundles available. There's conservative, moderate, and balanced. Could you maybe just talk through what those are sort of targeting?
Yeah, sure. So I think just to answer your first sort of question or comment around old,
The answer
I think
is
it
no,
really is,
I'm not old. That is the answer.
no, you're extremely young. And I'm in my early 40s, so I do think 40 is the new 20. So, but yeah, so I think when I talk about that, you know, people, when they look at their retirement age being 60, you see a lot of people now going into working into their 70s and 80s. So actually, they still had another 20 years to invest from 60 till 80, and they might still live up to 100. So yeah, my view is take more risk and invest as much as you can in higher yielding asset classes like shares. But yeah, to give you a view, and obviously some investors aren't that comfortable to put so much necessarily into shares, because shares can be a little bit more volatile. The share price goes up and down, and not everyone can stomach that. Although in order to be able to retire comfortably, you really do need to invest in some of those higher risk asset classes. But we've given you a range at Easy Asset Management. Our conservative portfolios is really a mix of assets that takes up to about 40% in shares. And then it will invest in other asset classes like bond, like property, and also money markets, so fixed income exposure. Then the moderate portfolio is also a mix of asset classes, but takes you up to about 60% of shares. So a little bit higher, steadier returns so that you can get enhanced returns, both income and growth. And then the balanced portfolio really goes up to the full maximum of 75% that you can invest in shares in that sort of category of portfolio. So it really is targeting that longer term growth, so that you are able to meet your retirement objectives.
Yeah, that's my personal favorite, but don't take my word for it. You guys decide. So I mentioned at the beginning of this webinar, these bundles are available in your ZAR account, in your tax-free savings account, which is amazing. I've got a tax-free savings and I'm definitely got a few in mine, and your retirement annuity account, but not all are available in each one. Can you kind of talk to why that is? Why is there a limitation on bundles available in the RA as an example?
So there is a regulation in South Africa, that's referred to as Regulation 28. And all that really means is that the regulator has created guidelines and a structure within which asset managers have to operate. And so for a retirement fund, they have set specific limits in terms of what percentage exposure you can invest in for higher risk assets. So that's why when I mentioned the balanced portfolio up to 75% in shares, that is the maximum that is allowed within that piece of regulation. And the reason for that is really that the regulators just don't want you to put 100% of your money in shares, and then potentially when you're close to retirement, the share prices drop, you know, the market is in a bear market and share prices aren't looking good, and then you sitting in a compromised position. So the regulators have just given that framework within which asset managers have to operate to make sure that there's a nice balanced portfolio that investors can, that isn't too sensitive about where the market is at what point in time. So that piece of regulation just limits what you need to, the percentages you can invest in each asset class. So other types of funds that wouldn't then be in the RA are our pure equity fund. And our global equity fund, if you don't mind me saying, has been one of the top performing global equity funds. And to beat the performance of the S&P 500, which is the index that represents the top 500 global stocks in the US, is really phenomenal, to say the least. So our fund there, which is a pure equity fund, which is not in the RA, it'll be under things like your ZAR wallet, TFSA, ranked number 1 out of 161 funds on the 15th of October. And again, we're really targeting to be within that 1% range of top managers in that category. So targeting outperformance. So we might go to sort of number 5 and number 10, but really wanting to be in that top 1 percentile bracket.
Wow, that's incredible. Congratulations. So any closing comments from you, Nicola, on bundles in your retirement annuity account, or, you know, bundles in general? Anything you want to close with?
Yeah, I think what Easy Asset Management has done is really a very unique, what I would call recipe of, you know, artificial intelligence is this theme that is trending now globally. But if we take a step back, there are so many other pieces of technology that one can use. There's been robotics, there are algorithms, there's data analysis tools, etc. And so what this fund manager does is we pretty much use and leverage technology because we're a fintech and a fintech group. And we combine that with our human expertise and our knowledge and experience and the hundreds of years of experience that we've got between all of us in the team, and put those two together. And it really is a nice sort of perfect mix of digital and human expertise to come up with those top global themes that are going to lead the next generation. We see a digital economy, we see consumer behavior in a specific direction. And so those themes is a very unique way of looking at the world. And you'll see some of the leading asset managers in the world is now actually starting to use thematic investing approach. But we've been doing it at Easy Asset Management for quite a while, and we've got a nice track record. And it has been a very new approach, and it is still quite difficult to explain in terms of how that thinking is. But we've seen that that definitely is the direction, and other managers are cottoning onto it globally.
Well, I think you've done an excellent job at unpacking that for us. I certainly got my head around it. I want to encourage everyone on this call to go and make use of a site we've got called Easy Wealth. On Easy Wealth, you're able to look at different bundles, compare them, see the constituents, see exactly what the bundle does. And you can even see how it's performed, which, you know, doesn't predict sort of any future results, but it's always a nice piece of research to include in your investment decisions. So go and check out easywealth.co.za. Go check out the Easy Asset Management bundles there. And yeah, you can even take a look at unit trusts as part of your RA strategy if you go and take a look at that site. But we're going to wrap there. Thank you, everyone, for joining us. And thank you so much, Nicola. That was really insightful.
Pleasure. Have an awesome day.